Well, of course, yesterday, KKR lobbed a $20 billion bid for Ramsay Health Care, which, if successful, would rank as the biggest ever private equity-backed buyout of an Australian-listed company. So is it a good deal? Well, for his thoughts, Marcus Bogdan from Blackmore Capital joining us here on the program. Marcus, it's great to go and see you there. Are you surprised, to go and start off with, that we've seen a bid lobbed by KKR consortium?
Well, I think healthcare was in an incredibly unusual position because you're coming out of the pandemic. The industry was under-earning for two years, and these are wonderful assets. So I'm not surprised to see activity in the healthcare sector. And Ramsay, obviously, given that they're the largest private hospital operator in Australia and a significant footprint both in the UK and Europe, these assets are particularly attractive. Also because they've got a very large property book in terms of the number of hospitals that they own in Australia, and that has obviously got a great deal of value for private equity.
Were on the Ramsay story for quite some time for those exact reasons that you were just running through. Now, $88, I mean, as you know, the share rallied 25% yesterday and still not there yet. What do you think about that $88?
Well, I think it's a highly considered bid by KKR. They've obviously done a lot of work behind the scenes. I think the consortium is the largest healthcare industry fund. There's also the consideration of the Paul Ramsay Foundation, which owns around 19% of Ramsay. I think all of those have considered, and all of those players have to be on board. But I think, you know, it's always this is the initial bid. They have to do their full due diligence, and this is probably an opening salvo.
Yeah, I was going to ask, do you think there might be another rival bid coming through? Because it is got that valuable assets, particularly the property book, which a lot of people expect would be spun out and then long leased back. What's your take there? Are we due for a bidding war?
Well, I think that the assets are so attractive, and I think there is always the ability of someone else to come into play there. But I think that the consortium that they've got with Hester, and also the consideration of Paul Ramsay Foundation is important. But no, we're certainly holding our shares.
So in terms of, you know, who's under the hood, you just alluded to Hester. So there's some super funds at play here. As we know, a super fund consortium was successful for Sydney Airport. Are we seeing these super funds just increasingly hoover up all these Aussie assets?
I think so, and it's particularly when there's significant sovereign assets, such as Sydney Airport, and also and private hospitals. 52 private hospitals that Ramsay own are incredibly long-term, cash-generative, attractive assets for the large industry super funds to own.
Other healthcare names rallied on the back of this news yesterday. It might be, just a short-term reaction, but do you expect we'll see more activity in this sector, given from a structural perspective, healthcare is clearly only going in one direction?
I think so, and you've also seen a number of the healthcare companies make a range of different acquisitions over the last several months, including Ramsay. So I think they are potentially in a sweet spot, and a very unusual spot, because you've got record backlogs of patients that need to be treated around the world. And it's not only hospitals, it's pathology, it's diagnostics. I think all of these assets are particularly attractive at this point in the cycle.
So the other issue that Scotty and I were having, of course, is does it feel like it's a peak in the cycle when you've just got private equity? They're so cashed up, they're looking to deploy all that cash. Are we at a peak, or is there more to run?
Well, I think you are right. They are cashed up, and we're probably at the mature end of the expansion phase in the stock market. However, they are taking advantage of a sector, namely healthcare, which is really under-earned over the last two years. And so they've got this, one-time opportunity to look at these prized assets.
More broadly, Marcus, just from a broader market perspective, how do you see things at the moment? We're very resilient, the local market in particular, relative to the rest of the world, just continue to power higher and looks set to go and test those highs we saw last year.
Yeah, I think your previous guest was right on in terms of where Australia sits relative to the rest of the world. I mean, we are the lucky country at the moment where we are geographically. The fact that we've got surplus agriculture, we've got surplus energy, and surplus resources. These are all really attractive assets at this point in time. And in addition, we're coming out of a lockdown, and so we've got the reopening trade. We're actually sort of come upgrade in terms of GDP forecasts. When we look at net earnings revisions, they still remain positive. We saw Brambles update today. They've given an upgrade on their guidance. So the backdrop for Australia, particularly relative to the rest of the world, still looks attractive.